Well, good morning, everyone, and welcome to this IFS Deaton event looking at welfare. I'm Paul Johnson. I'm director of the IFS, and I'll be chairing this, but I will disappear from your screens very soon to hand over to those who will be doing the real work. Just by way of introduction, this is actually the last of the 19 studies that make up the first element of our big review of inequality. All of the other studies and this one can be found on our website, covering everything from history and philosophy of inequality through to issues in health, education, early years, labour markets, firms, and much more besides. This one, of course, is on welfare and the role of welfare policy in reducing inequality and the consequences of that. In terms of the running order, I'm going to be handing over in a moment to Alex Beer from the Nuffield Foundation, and we are incredibly grateful to the Nuffield Foundation for funding this very big and very important series of work. Rob Joyce, my colleague, will then do the presentation of the main chapter, the main study here. He will speak to that. He will then hand over to Nick Timmins. Hard to know how to introduce Nick Timmins. I think of him as a sort of one-man social policy think tank, previously, of course, social policy editor at the Financial Times, and now working with a number of organisations across social policy, and author of the History of the Welfare State, which I heartily recommend. And then finally, delighted to have Ruth Patrick, Senior Lecturer in Social Policy at the University of York, and also an author of a commentary or a piece of work as part of the Deaton Review. Those people will speak, hopefully finishing before 11:45. We'll then have a good half hour for questions and discussion. Please do put your questions into the Slido app, which you should have a link to. I will stop there and hand over to Alex. You won't see me again until everyone else has finished speaking, at which point I will chair the conversation.
Thank you, Paul. The Nuffield Foundation is delighted to be funding the important research being undertaken by the IFS Deaton Review. The Nuffield Foundation's mission is to advance social well-being. We do this by funding research and analysis in the areas of education, welfare, and justice, to help better understand the issues affecting life chances and the trends and disruptive forces that are changing the structure and the context of people's lives. It is our aim that the research that we fund informs social policy and ultimately makes a difference to people's lives by demonstrating how we might address inequalities, discrimination, and vulnerabilities in our diverse and fragmented society. The review, with its aspiration to understand what drives the inequalities we see, how they are related, and what we might do to influence them, resonates strongly with these aims. The benefit and tax credit system provides a framework through which income inequalities, which may themselves be driven by intersecting inequalities such as gender, ethnicity, and disability, might be responded to. However, its design is fraught with trade-offs, such as those in relation to work incentives and levels of government expenditure. And too often, the individuals and families that interact with the system, a system that most of us will rely on at some point in our lives, get lost in technical arguments at best, and at worst, demonised as undeserving. I would like to thank the team working on this most recent chapter of the review of benefits and tax credits for such a thorough description of the transfer system and some of the challenges facing it. Thanks also to Nick and Ruth, who have authored accompanying commentaries. And indeed, as this is the last chapter-related event, many contributors across the review so far. I would also like to thank all of you for joining the event today. And now over to Rob.
Thanks very much, Alex. Let me just bring up my slides, which hopefully you can all see now. Okay, right. So I am presenting, I suppose, an overview of a big evidence chapter that feeds into the deliberations of the review, much like all the others that have come out before it. And like those, the focus of this is to review the evidence on what's changed and why, on the impacts that the benefit system has, to discuss some of the possible directions in which it could be reformed and the pros and cons and like the impacts of those, and also to point out and to discuss remaining gaps in our knowledge that continue to constrain better policy making. So I'm going to give you a run through of some of the main points from that here. Given very limited time, it is no substitute for even just glancing through the whole chapter, never mind reading it from front to back. For those of you who really do want to get into more detail on this, I would recommend you do that too. Okay, so I want to start with a little note on scope, particularly because different terms can get used to mean different things, including in different countries, which can make this debate very, very confusing. But here I'm showing you an overview of what one might consider to be a sort of broad definition of spending on the welfare state in the UK. That has no hard and fast definition, but it's a term that's often used, and it might quite reasonably be taken to encompass all of the elements of this pie chart, including, for example, health and education, various other services that the government provides as part of what you might think of as the safety net in the UK. And we're only going to be focusing on a small part of that particular pie, essentially on the element that is about cash transfers to households in the form of what we in the UK tend to call benefits or tax credits. And even among all cash transfers, we're not focusing here on those that go to pensioners, the blue chunk of this pie, mostly because that just raises a whole set of different issues in its own right, extremely important ones, around how we support people in their retirement, which is really quite different from the context of the working age system that's our focus here. The vast majority of which, probably not quite all, but the vast majority of which really the backdrop is about the labour market, and it's about supporting people who, in one way or another, are deemed not able to support themselves sufficiently through the labour market. So that's our focus here. And just to note that might only be a small portion of that very big pie, but it's extremely important in its own right. That £100 billion approximately per year that we spend on working age cash transfers, benefits and tax credits, that's more than we spend on education. It's more than what we spend on defence and policing combined. So it's a very big part of what the government does. It's clearly a huge part of the landscape in terms of shaping levels of poverty and deprivation in the UK. So for example, at any one moment in time, about 2 million households get the vast majority, at least 80% of their income from this source. But even that really underplays the true reach of the system. So more than a quarter, actually, of all working age households at any point in time are in receipt of some means-tested support. And even that underplays really the reach of the system, because this support is typically given, as we'll see in more detail in a moment, in light of having particular circumstances at a point in time that entitle you to that support. And circumstances change over time for the same people. So many, many people will at some point draw on this system. So really, this is a very important background part of the economy and society. At any moment in time you look at the labour market, many people in that labour market are currently receiving top-ups to their income in benefits, or have recently done so, or know that they may well do so in the future, and that it's acting as a sort of insurance against things that might happen to them in the future, just as an example. So it's a very, very consequential part of our economy and society. Very high level then, what's happened to total spending on this form of support over time? It's increased a lot on the whole over the post-war years. This shows you that in real inflation-adjusted terms, per capita, working age spending is about 2.5 times higher than it was in the late 70s. Of course, on the whole, national income has risen over this period as well, but even as a share of national income, we've tended to expand this element of the welfare state. Over time, it's pretty cyclical, as you might imagine. It goes up during recessions and down again when incomes are booming, but each peak has tended to be higher than the last, and each trough has tended to be higher than the last, with the key exception, as no doubt you will have spotted, of that last a decade or so, when the austerity period, essentially between the previous two recessions in the UK, did reduce spending considerably. And that was very much, this is really the only time I'll mention spending on pensioners as important context here for spending on the working age population, because that austerity period, insofar as it affected cash transfers, was very much concentrated on the working age population. So the fact that pensioner spending was protected, in fact more than protected from that, is an important part of the backdrop as to why the squeeze on the working age benefit budget was so large over that particular period. Now, I want to just say a couple more things at a very high level about what the system looks like, breaking down that overall increase in spending, if you like, into some broad categories. First of all, doing it in this way, splitting benefits very, very broadly indeed into three buckets. Those that are means tested, so that's benefits that you get in light of having a low income and low levels of financial assets at a particular point in time. Those that are contributory, which essentially are benefits you can get in light of having made some definition of contributions into the system in the past. And then other benefits that you can get irrespective of current income or past contributions if you satisfy certain other conditions. So, for example, the traditionally universal child benefit be in that category, disability benefits that you can get irrespective of your level of income, but also be in that category. So what you see here is that means testing is has increasingly been the dominant form of cash transfers for the working age population in the UK. It is also the bit that's tended to be cut back during recent years during austerity, but nevertheless, you compare where we are now with a generation or two ago, it is the means tested part of the system that has been expanded. And each time the government has wanted to address a new perceived need in society or prioritise a new problem through the benefit system, it has tended to be the means tested elements that have been added, layered on top of what came before, or expanded. That has been a repeated pattern. And the potential attractions of doing that are fairly clear. It's a way at any point in time of focusing the additional resources on those who seem to need it most at that point in time, and of limiting the cost in that way. But this isn't a balance that all countries have chosen, and it's not a balance that we used to have, as you can see here. So there are many interesting discussions to be had about that balance. Nick is going to say a lot more, in particular about the history of how we got to where we are. This quite distinctive position relative to a lot of countries' welfare systems. So I won't go into it more here, other than just to say that I think in some ways this picture does set the scene quite well at a very high level for a lot of the debates and discussions that we hear in the UK about welfare policy, because a lot of them really are about the pros and cons of having a means-tested system. I've mentioned some of the obvious appeals of it, but on the drawback side, this opens the door to many discussions about creating perverse incentive for some people, because you have to withdraw this support as earnings increase if you're means testing it, and that can create danger of perverse incentives to earn more, for example. But beyond just the narrowly economic issues as well, it opens the door to some of the concerns around stigmatization of recipients, perhaps. As soon as you means test things, you have a system of assessment and judgment on some level or other. You have people who are assessing and people who are being assessed. And so I think there are issues there around what we might think of as relational inequality, that means testing perhaps creates some risk, as well as being very well targeted at addressing material inequality. Ruth will pick up more on some of those themes as well. So again, I won't say any more, but I think this picture does set the scene for quite a lot of the debates we hear in the UK about benefits. And one final way of breaking down the budget at a very high level that I want to do is by function, if you like, by type. This splits spending according to a measure in some sense of what it's for or who it's going to. And what this really shows you is that three main broad elements account for most of this spending. Those are support for housing costs, support for in light of ill health and the consequences of ill health, that's the green section, and then support for families who are in paid work but on low pay, and that's the grey section. That's what most of the budget is doing. This picture, by the way, doesn't include some of the most recent years, which is actually because as those of you immersed in UK policy will know, a lot of these different strands of support are now being integrated together in the form of universal credit, which actually makes it harder to split by function in this way. But the big picture certainly wouldn't have changed. So I think it's important to note that actually, whilst the system is very complicated, most of it is doing three broad things, as you can see here, and most of the growth in the system over time is accounted for by these three broad functions, if you like. And so in a way, this can be seen as a feature of having a targeted system that's clearly targeted at particular problems. It evolves as the problems underlying in society evolve. So as we have a bigger and bigger problem in the UK with low pay among those in work, as opposed to lots of people with no paid work at all, so the grey bit of this picture gets bigger. The money tends to change direction in order to follow the evolving problems underlying it in society. And so it goes with housing costs, the rise of high cost private renting and the consequent increase in support for housing. So you can see that as a sort of feature of this sort of system. It's, for example, it's something that a universal system couldn't do. The money wouldn't change direction in this way to follow evolving problems, and that would be one of the things you have to confront if you're someone who wants a lot more universalism in the system. But this also, I think, highlights that the welfare system, because it is essentially a patch that we are applying over particular problems that we've identified, it is downstream of those problems. And if problems perhaps more fundamental than welfare policy itself go unaddressed, they will tend to show up in the welfare system and put strain on the welfare system. And you can see that, I think, very clearly from this picture. So I want to say a little bit more now about how the sort of targeting of our system has been changing over time in terms of what kinds of people it is supporting. First of all, as I've noted very briefly, it is worth just reminding ourselves that there's been a very high-level shift away from the working age population as a whole towards pensioners in terms of where the cash transfer system is directing its money. But within the working age population that I'm focused on here, a couple of other shifts I would point out. First of all, over the long term, there certainly has been a shift towards supporting families with children. Until the most recent decade, where that has been partly unwound, austerity has actually affected families with children more than those without. But the longer term trend is the opposite, and I'll show you that here. This shows you the basic rates of the out of work safety net over time, adjusted for inflation, taking first of all single people, both without children and then with two children. And you can see here huge differences. Perhaps the most striking aspect of this chart, arguably, is just the fact that the green line is completely flat. So over a 50-year period, the basic level of out-of-work support for someone without children really hasn't changed. So all of those increases that I showed you right at the start in the amount we're spending on the working age cash transfer budget, none of that translates into any increase for those out of work unless they have children. For those with children, there have been increases in support, most sharply in the late 90s and early 2000s, which was part of the New Labour government at the time, their attempts to reduce child poverty. And if I bring up the similar figures for couples, you see a very, very similar picture. Now, as I said, this has been partly unwound in recent years because austerity has actually impacted families with children more, families who tend to receive more benefits in the first place. And there are some particular cuts that actually wouldn't show up here, in particular those affecting those with 3 or more children that have really bitten hard. But still, if we're comparing at a broad level where we are now with where we were a generation or two ago, I think perhaps the most striking trend here is just the complete lack of change in the level of the safety net over that long period for those without children. A period over which, of course, earnings and incomes as a whole in the country have grown rather a lot. And the other shift I would want to highlight here is towards families with someone in paid work. So this shows you that. And I should say, first of all, it has been a sort of natural shift in where the benefits budget is going towards families in work, insofar as that's a natural consequence of the fact that there are more families in work now than there used to be. So naturally, more money goes to families who are in work. But there's also been a deliberate reprofiling of support towards that group as well. And that's what I'm going to try and highlight here. So here, what I'm going to do is split households, working age households, into 4 groups based on the level of earnings. Okay, so earnings, not income. So the amount they're getting from the labour market alone. Just to provide some sort of context for those earnings levels, I'll anchor them to the official poverty line in the UK. So on the left, we have households with no earnings, so that's households without anyone in paid work. And then we have households with varying amounts of earnings, starting off with quite low levels, those whose pre-tax earnings are still below the poverty line. And then on the right, those whose earnings exceed that level. And I'm going to show you for each of those groups the real average change in the amount of benefits received over time. First of all, from the early 90s to the beginning of austerity. And you see here that increases in spending were concentrated among those households who were in work, but on relatively low levels of earnings. If we wind forward and include the austerity years as well, the picture changes quite a bit, as you might expect. All the changes look less generous now because of the cutbacks. And in particular, there have been quite large proportional cutbacks to support for those on somewhat higher levels of earnings. But we still see a pattern whereby the biggest proportional increases over the past quarter century or so have been to those households who do have someone in paid work, but where the earnings level is really quite low. So that's had a pretty big effect actually on shaping what's happened to incomes of low earning working households. It's boosted them quite a bit compared to what we would have seen without those increases in benefits. But in some ways, a flip side of that is the continued lack of focus on the out of work safety net, especially for those with children, as we've seen. And because earnings in the country as a whole have over long periods of time grown, that means that in some sense, the level of insurance that is provided against losing your job is something that has really not been prioritized by reforms in the UK for a long, long time now. This shows you measures of that. These are called replacement rates. So that's a measure of the amount of income you can have out of work relative to what you would have had in work for families with one earner on average earnings in these examples. And it's comparing the UK to the rest of the OECD, or almost all of the rest of the OECD. And what you see here is these replacement rates are really very low in comparison internationally. They're particularly low once you factor in the much bigger contributory benefit systems that a lot of other countries have. So a key reason for that is that if you are an earner on more than very, very low earnings in many other countries, those extra earnings you have will kind of buy you more in terms of what you'd be entitled to in benefits were you to lose your job. Whereas in the UK, we don't have that, or very little of that contributory element. So particularly if you're someone who's not on the very lowest earnings, the amount of insurance you get against job loss in the UK really is very, very low by international standards, and lower than it used to be in the UK. And that's particularly the case, as we've already seen, for those without children. Another point we make in the chapter is that if you look in a little bit more detail at the sorts of work that we tended to be incentivising through series of reforms in the UK, there's another very, very clear pattern that stands out, and that is that we've increasingly been incentivising more and more people to do part-time paid work, whilst, if anything, typically discouraging people to move from part-time to full-time paid work. Let me just demonstrate that fact here before I say a little bit more about it. So this is going to show you for low-earning parents, on average, the effective tax rate that they face were they to change the number of hours they're working on a couple of different margins. First of all, if they were to go from doing no paid work to 20 hours a week, so part-time paid work, and then also if they were to go from doing 20 to 40 hours, so going from part-time to full-time paid work. The effective tax rate here, that is a measure just of how much of the additional earnings you would pay in tax or effectively lose through withdrawn means-tested support. Okay. And I'm going to show you those both in 1997 and currently. First of all, with the current figures ignoring universal credit, so this is just under the so-called legacy system, ignoring the fact that universal credit will change this further. I'll come on to that in a moment. But what you see here is that the broad pattern of all the changes to the system over the past 25 years has been to reduce the effective tax rate on moving from doing no paid work to part-time paid work, but to increase the effective tax rate upon moving from part-time work to full-time paid work. What's going on here? I mean, quite a lot is going on, but at a very high level, this is a consequence of the design of our much expanded tax credit system, which tends to mean that there is more in-work support available for low-earning workers. But equally, because there's more available, there's then more to be withdrawn, given that this is still a means-tested payment, once earnings go beyond a certain level. And that tends to have the effect, as it happens, of encouraging part-time work, but actually discouraging full-time work. And it turns out that if we add in universal credit, although it wasn't particularly explicitly designed with this intention in mind, that is the effect it has, actually to further reinforce that pattern. So that's two major sets of reforms we've made to financial incentives in the UK, which have had this quite notable impact, pushing in the same direction. So we have a bit more discussion of this point in the chapter. And one thing to say is there's no obvious, as ever, there's no obvious right answer to what these numbers should be. Okay, I mean, these numbers are shaped essentially by how much we are giving to different sorts of families with different levels of earnings. And there's political and distributional judgments in there as much as anything else. And on the other side, we're balancing that against things like what is the impact of distorting people's incentives in this way by changing the relative financial rewards to different kinds of work. But on that point, we know from lots and lots of research that whilst many people would have chosen, for example, to work part-time irrespective of these sorts of incentives, because it just makes sense for them, given competing considerations of childcare constraints and costs and wanting to spend time with family and so on. We also know that these incentives do also tip the balance for some people, and that there are, for example, people in the UK right now who would have worked full-time, but because we're taking away effectively more than half of the extra earnings that they would get from doing that, they're working part-time instead. And something we point out about this sort of trade-off in the chapter is that probably one aspect of that that's underappreciated and that we're increasingly understanding better is that the effects of that probably stretch into the future, because we increasingly understand that part-time work and full-time jobs, they tend to have very different implications for wage progression, and that rather depressingly, wage progression often seems to depend on having a full-time job. So pushing people more and more into this particular part-time form of work probably does have a drawback that is perhaps still underappreciated, which is that it probably means that their wages in future are lower, not just that they're working less now. So we discuss this a bit more in the chapter and suggest this is something that's perhaps worth paying more attention to in policymaking going forward than we have done in the past. And just the final substantive slide I'm going to talk about is on conditionality. This is another major reform direction. If I had to list perhaps the top 5 big directions of reform in the UK over the past 20 years or so, this would, I think, make that list. The expansion of job search conditions to more people, in particular to more single parents, but although we're now doing the same thing to additional groups as part of the universal credit reforms. And it so turns out, when we draw on some work that looks in detail at the impact of what happened when we expanded job search conditions to more single parents claiming out of work benefits, that actually, again, it turns out that it fits into this same narrative once more of encouraging more and more part-time. This shows you estimates that confirm that. So looking at those reforms for single parents rolled out between 2008 and 2012, this shows you how many hours of paid work per week single parents who are in paid work did essentially on the eve of those reforms, loosely speaking, or what we think they would have done in the absence of those reforms. So many of them would have chosen to work part-time anyway for perfectly clear and understandable reasons, particularly given the sorts of considerations single parents are balancing. But actually, most of them work full-time, or at least 30 hours a week. But if we look at the impact of extending job search conditions to those who are on out-of-work benefits, all of the impact there pretty much is on part-time work. So once again, it's a policy which is really solely encouraging part-time employment, which, as we increasingly understand, doesn't do a great deal longer term, unfortunately, for people's career prospects and progression. So this is another angle of policy that we highlight perhaps needs more careful thought about what exactly the goals are and what we're achieving. But I should wrap up there. So a very, very high level summary of what we've seen: an increased focus of policy on a couple of things. In-work support, largely, as I've said, with the impact, often not explicit, but the way it shakes out is the impact of encouraging quite low numbers of hours of paid work. And also over the longer term, an increased focus of policy on families with children. But that is being partly undone, or has been partly undone, by the austerity years. Something that's very, very weak in the UK by international standards and has got increasingly weak is the amount of insurance against unemployment. And as I've explained, that's especially true for those not on the very lowest earnings levels and those without children. The system has become very, very heavily means tested over time, more and more so, with all the pros and cons that brings. And we're going to hear a little bit more about some of that, both from Nick and Ruth in a moment. And again, I would just remind that it is a necessary but a patch in large part over problems in society and in the economy that we haven't yet found better ways of addressing, like low pay, high housing costs, and ill health and its consequences. And of course, the welfare system's job and all the trade-offs involved would be a lot easier if we could find ways of addressing those deeper underlying problems. But I will stop there and hand over to Nick.
Great. Am I there? Am I here? I'm here. Right. Well, what the exam question I was set was, why has the UK social security system become so means tested? And that is indeed a jolly good question, because it was not designed to operate this way. The founding document of our modern social security system, after all, was the Beveridge Report of 1942. And Beveridge had a visceral dislike of means tests. He, like many others, remembered the punitive household means tests of the early 1930s, under which a grandparent qualifying for a pension or even a child getting a paper round could see benefit reduced or even abolished. These means tests almost actively encouraged small-scale fraud, but more generally, however, Beveridge argued that means tests penalise savings. They penalise what people have come to regard as the duty and pleasure of thrift, he said, of putting pennies away for a rainy day. And he said the benefits were offered only on terms which make men unwilling to have recourse to them. His solution was a system of national insurance, a something for something deal into which the employee, employers and the taxpayer all contributed, providing, as he put it, benefits in return for contributions. And that, he confidently declared, is what the people of Britain desire. And he was crystal clear that no means test of any kind can be applied to the benefits in his scheme. Now, despite that stipulation, Beveridge did, of course, recognise that a residual means-tested safety net would have to remain for those who had not paid sufficient contributions. But given that successive governments accepted his commitment, his call for a commitment to full employment, it was meant to be very residual. So what went wrong? How did it all end up so means-tested? Here it makes sense to split the story into three: adult working age benefits, benefits for children, and state pensions. And in the 10 minutes or so I have available, one has to really compress the arguments and explanations. But in summary, what happened is this. First, Beveridge went for a flat rate insurance system, as we've heard, not an earnings-related one. This happened in much of continental Europe. Flat rate contributions for flat rate benefits. And some academics see this as the original sin, so to speak. Its flat rate nature meant that while it provided a platform on which people could build savings without them being means tested away when jobs were lost, higher earners, who tended to be at lower risk of unemployment, fell back further onto this platform, this time-limited platform, than did lower earners, who in turn tended to be at greater risk of job loss. As a result, this made the working age system of less value to, for want of a better phrase, of less value to the middle classes, and thus attracted less support from them, in contrast, for example, to the arrival of the NHS and of free schooling, from both of which the middle classes benefited hugely. So there was less support for this than for other parts of the welfare state. What then happened was a series of societal changes. One was more longer-term unemployment. Incredibly rare in the decade or so after 1948, it slowly increased, leading to more people lacking the contributions that avoided the means-tested safety net. The second change, starting slowly in the 1970s, but then accelerating, was a sharp rise in divorce and in lone parenthood more generally. And by definition, neither of those are insurable. So that in turn created more reliance on means-tested benefits. A third was the ability of medics to keep alive children who in earlier times would have died at birth or shortly afterwards. Some were left with ongoing disability, and for a proportion of those, their disabilities were sufficiently severe that they would not be able to work, and thus they would not pay national insurance. In other words, another uninsurable risk with support coming from means-tested benefits. In addition, from the 60s on came a recognition of the costs of disability. Now, that's an immensely complicated story, but in summary, it led to an increase in some NI-related disability benefits for those who could work, but a bigger increase in both non-contributory and means-tested payments. To give some idea of the scale, in constant prices, the cost of means-tested benefits for people with disabilities rose from roughly 500 million in 1974 to just over £3 billion at the end of the 1990s. Then there was housing. The capital cost of council housing, and indeed later of other forms of social housing, was initially heavily subsidised. That produced low rents. Progressively, however, those subsidies were withdrawn, leading to higher rents, which came to be covered by means testing, as did rents in the growing private sector rental market. And the end result was housing benefit, which of course is now being rolled into universal credit. And housing benefit has proved to be an almost constant attempt to run up a fast-moving down escalator, with the escalator becoming ever more means-tested and, by and large, covering less good quality accommodation. So all of those factors led to the big increase in means testing, as did the sometimes contradictory, sometimes reinforcing desires of both Labour and Conservative governments. As the late, great John Hills put it, over the years, the contributory principle lost more than 15 battles. Labour governments, broadly speaking, wanted to make benefits more inclusive. So they boosted non-contributory ones and tended to soften the contribution conditions for the national insurance or contributory ones. So, for example, one can these days be credited in for the state pension as if one had paid national insurance, if one is ill, disabled, on maternity pay, or on carer's allowance. So Labour's actions tended to weaken the link between contributions paid and benefits received. By contrast, Conservative governments tended to rely more on means testing as a way of targeting resources on the least well off. They tended to reduce the scope of contributory benefits while taxing some that were initially tax-free. Now, it should be said that these were the parties' tendencies. In practice, each did a bit of both over the years. And finally, unemployment benefit in particular used to be paid on the strict condition, a very few hours aside, that one did not work while on it. However, as technological change destroyed some white-collar jobs and automated some blue-collar ones, and as globalization shifted manufacturing to other countries, long-term unemployment rose and lower to middle income wages became depressed, which brought a rise in in-work poverty. So chiefly from the 1990s on, both the main political parties slowly came to the view that rather than pay people benefit on condition that they did not work, it was better to use at least some of that money to support people in low-paid work. So along with the introduction of a minimum wage, we get to tax credits, large-scale, in-work, means-tested support, with those now being morphed into universal credit. So that, in highly compressed form, is the story of how adult working age benefits became vastly more means-tested. So 3 final points. One about state pensions, one about children, and a final one on whether what is left of the working age national insurance system is worth preserving. Children first. There's no time to discuss the creation of child benefit in the 1970s, but there is time to note, as Rob already has done, that in 1999, when Tony Blair pledged to abolish child poverty in a generation, it was decided to target extra help for children towards the middle and lower end of the income scale, rather than increase the universal child benefit, which would have been appreciably more expensive. So the means-tested child tax credit arrived, paid on top of child benefit, so to speak. This provided much more generous support for children, as Rob's slides have shown, but at the price of adding yet more means testing into the system. And then in 2013, George Osborne means-tested child benefit at the top end, withdrawing it from families where either partner earned more than $50,000 a year. This must rate as quite possibly the clunkiest means tested ever. If you wanted to design a means test to catch families out and land them in trouble with the revenue, this is pretty much the perfect way to do it. The threshold has not changed, so a measure that initially affected just 1 in 8 families now affects about 1 in 5. And in addition, child tax credit is now paid in the main only for the first 2 children. I'll turn now to state pensions, which after an absolutely roller coaster ride is the one bit of the story that actually goes the other way. It remains contributory based, although as already noted, people be credited in without actually paying. It is worth noting that at one point in the early 2000s, state pensions, like working age benefits, were also heading towards a deeply means-tested future, only for the Turner Pensions Commission to rescue them from that fate. The state pension is the only big bit of the current social security system that Beveridge would undoubtedly recognise. Finally, for working age adults, there does remain contributory or national insurance-based job seekers allowance, the old unemployment benefit, and contributory employment and support allowance for those with disabilities. Now, for those with a purely tidy mind, it must be tempting to simply roll these into universal credit, making them means tested. There remain, however, distinct advantages in these contributory benefits for those who qualify. They are an individual, not a household benefit, and unlike in UC, savings are not taken into account. They provide a better, if far from generous, cushion against job loss, both for the individual and the wider family, if there is one. They allow working partners to carry on earning without the household's income being means tested. And it can be argued that's good for the economy, as people may well reduce immediate expenditure by less than would be the case if they fell back purely on the means tested benefits. And there is a good case, as no doubt will be discussed later, for modestly enhancing what little remains of the contributory system for working age adults. So concluding, as I have, with what might in the contributory principle still be worth saving, that in a nutshell, I think, gives the main reasons why so much of the UK social security system has become so means tested. So at this point, I'm handing over to Ruth Patrick, who will talk about living at the sharp end of what means tested benefits mean. Thank you very much.
Thank you. Thanks, Nick. So I'll now try and share my screen. Right. So hopefully you guys can see it. I just have to assume you can and press on. So thanks so much for having me, and really great to follow those 2 presentations that there's probably loads of questions about. So I feel bad that I'm kind of encroaching into question time, but I probably am going to have to use my 10 to 12 minutes. So apologies for that. What I wanted to kind of focus on today is kind of what it means, what it feels like, what it looks like to live very much at the sharp end of socioeconomic inequality. So what does that experience feel like, and what does it mean? And to do that, I'm drawing on 5 studies, some of which have been funded by the Nuffield Foundation as well. So just to thank Nuffield Foundation there for the funding of the COVID realities work and the work on the 2-child limit and the benefit cap that I was speaking about. But to say that some of the current work is also funded by Financial Fairness Trust, and then also sharing work funded by ESRC and the Joseph Rowntree Foundation. But just to start us off, I just wanted to kind of share a quote from some work we've been doing on changing realities, because I think it really sort of grounds us in where we're at the moment and the kind of current time. And what it's worth saying is that this is all the work I'm sharing is qualitative work. It's all working directly and often in partnership with people that are themselves living on a low income. And in this case, from changing realities and also with COVID realities, we're sharing diary entries that people are sharing. And this is Artie writing just last month, and she sort of describes a walk she took with her youngest son. And she says, you know, out for a walk with my youngest son when I noticed him wincing. I stopped him and he showed me that his shoes had come apart at the seams, so his feet were getting wet. I reminded him that he needs to tell me these things, and he said that it happened a while ago, but he didn't want to worry me as he didn't think I could afford to buy him new ones. He's right, but God, that hurts to realise. And I think we really see kind of it's quite sort of difficult and painful, I think, to read and I'm sure to hear, but we see that sort of very real and significant harm that's been done for people at the sharp end of socioeconomic inequality, where the kind of social security system is really failing them in terms of meeting those very basic needs. And so just in terms of the sort of frames that I wanted to kind of bring to the discussion, I think the first thing is just to really kind of welcome the inequality the Deaton review, and also that kind of focus on inequality, you know, when we think about and talk about kind of poverty and the kind of work of the social security system, it's really valuable to recognise and look at it within this broader inequality frame. But I guess, and in my contribution to sort of support the chapter that Rob's spoken to, my kind of probably biggest point that I'm trying to make is that we need to look at the material harms that are being done to people by these financial hardships they're experiencing, but we also need to look at the relational impact it has. So the extent to which doing without and living within a system that kind of says it's okay for you to do without, that harms relations as well, and people's kind of everyday experiences. And I think that's really important that we do attend to and focus on both the material, but also the relational harms that are being done. And I think when we do that, it's useful certainly to draw on the work of people like Ruth Lister and Nancy Fraser. And Ruth Lister's talking about this idea of kind of people in poverty counting for nothing. And I think when we look at that and we look at kind of policy decisions and policy narratives coming from Westminster, what we often see is a kind of invisibility of the very hard work that's been done by people, particularly on out of work benefits, but also of just their kind of their everyday needs. And I think what's been especially noticeable when we look at the pandemic and then the cost of living crisis is this very hard and firm focus on the need to protect working families. And there's a kind of just a silence and invisibility of the kind of parallel needs to protect those who are not currently in paid work. And I think that that narrative is harmful, as well as the kind of policy effects that we go on to see. So I'm just going to share a video now, which is from parents talking about this.
To make sure that my children don't feel the hunger that I don't want them to ever grow up feeling. I go hungry. I don't eat during the day. I eat when the children are at home for dinner time. I don't eat breakfast anymore. I don't have lunch anymore. I don't even let myself snack anymore. And it's not the way that anyone should be living. It affects our physical health. It affects our mental health. And it affects our children's development as well, because they see us hungry, they see us scared, they see us grumpy, and they don't have the ability to separate that from their burden. They take that on as their reflection of the world around them, and as much as we try to protect them from it, we can't. But it's such an easy fix.
Right, so yeah, sorry. So that was just to kind of share in terms of that kind of financial hardship and the experience of being in kind of real and significant poverty, and that's somebody speaking who's on universal credit. The other point I wanted to make about the kind of financial insecurity and how it feels and how it's experienced is around the kind of endemic and state-led insecurity that people routinely experience, and this is often arguably and potentially deliberately by design. And I think we have seen this particularly, for example, over the decision to uprate benefits in line with inflation, which was a welcome decision, but which the government really dragged their heels and prevaricated over. And while people were waiting to find out about that decision, they were kind of incredibly anxious and nervous about how they'd survive. So at the time, I won't read this in full, you can read it on the screen, but what Eric is kind of, he was writing his diary in September last year, and he was just incredibly worried about how he would cope if the benefits weren't increased. And he says, you know, I've simply come to the end of any cutbacks I can make. And then he goes on to say, we're now living in the dark, unable to buy washing powder to wash our clothes, and surviving on very basic food that does not need cooking if possible. So very, very real kind of physical, financial hardship, but then also causing very real worry because of a kind of failure by the government to kind of make a decision sooner and leaving people in insecurity. So then, and I think Nick mentioned this in terms of the 2-child limit, but just to share somebody's experience who's affected by the 2-child limit and talking about the impact that has on her everyday life. And just, you know, she says, you know, I know it sounds daft saying you don't have that extra cost for £100 a month, whatever, if you could get it for that other child, but it makes a really big difference. And she goes on to talk about what that means in terms of not being able to put the heating on and kind of sitting there with her coat wet, and coat is wet, and her trainers are too, but she can't dry them, she can't afford to. And I think we have to kind of recognise and attend to those everyday experiences we're facing. Because the time, I'll like kind of fly through this, but also to say that the kind of, there's been, along with the kind of shift to means testing, we've also seen a massive rise in discretionary and charitable forms of provision, most notably perhaps through kind of local welfare assistance schemes, but also food banks. And these create new layers actually of conditionality, so what Rob was talking about, but new kind of hoops people have to jump through, and these can be very difficult. And so Charlotte talks about applying for discretionary support for a cooker, and she kind of has these encounters with the people kind of gatekeeping those grants, and she says, I didn't feel like a human, I didn't feel respected, I felt like a rat. It's horrible feeling. So really kind of harmful things. But I'll try another video, so this is moving on to kind of relational harms as well.
They didn't listen anyway. When Matt first died, they didn't pay me enough housing benefit. My first entitlement was £79, so I'd lost a whole wage, and they told me I was entitled to £79. And they were arguing the toss with me about who was on my tenancy agreement. And even though I told them that he was dead and was no longer living under my roof for that reason, they were adamant that he was on the tenancy. So I wasn't entitled to full tenancy, the full rent. And it was like, what do you want me to do? Send you his ashes? Like, give me a break. It was ridiculous. And that went on for a few weeks with them just saying, no, you've got too many people on the tenancy agreement. And it was like, no, I've like, how many more times? But they didn't listen. And even when they admitted they were wrong, they didn't apologise.
So that's,
they didn't listen anyway.
Oh, sorry, no. Okay, so that's you know, somebody on universal credit, and actually again, kind of echoing things that Rob said. She was a widow who was in work and receiving universal credit and feeling not listened to, and you know, getting kind of a very difficult experience through her interactions with the Department for Work and Pensions. But I think it's important to emphasise in terms of some of the relational harms that are kind of experienced often by people on social security, that these can be, and in some ways, you know, hers was, they can be small kind of administrative challenges that kind of embed and extend the sort of inequality and the hardship people face, but also are themselves tied to often conditionality in the ways that conditionality governs encounters. And this was an example that, again, I'll kind of skim through, but to say that the Universal Credit Journal is often seen as a place where people are expected to kind of demonstrate and prove their job search activities, but it's a very one-sided interaction. So this is Nellie from Code Realities, and she says, you know, the journal often seems like simply a way for the DWP to send demands rather than a way for us to ask questions that ask for help. As soon as you do, your signposts out the communication. So that feeling of a very unequal relationship, which is problematic. But also, and this was this kind of mirrored in some ways, kind of Rob's slide around some single parents and kind of how their experiences changed, maybe over time, and obviously with the ratcheting up of conditionality. And Betty is reflecting here on the past 10 years, and she says, you know, I feel crushed by the government. As a lone parent in a low income for over 10 years, I'm used to struggling financially. I always look for a way out of the hole, whether it's gaining more qualifications or taking on extra employment to find the government move the goalposts. This time the goalposts are off the pitch and placed down the road. I swing from anxiety to depressed and unmotivated. And so again, we see those harms being caused, and we have to kind of ask the questions of the utility of conditionality, especially when we look at kind of where it's towards. And then so finally, just to try and kind of really flesh out how the relational and the financial can intersect and kind of speak to each other. Caroline, who participated in Inequalities, wrote a blog at the time in which the decision was being made to finally withdraw the £20 uplift to universal credit. And she speaks firstly about that financial harm it's going to do to her. And she said, how will I manage? What is there to cut back or give up on? Then she also says, I just feel our government isn't listening to us, or they truly don't care. And so I think that kind of merging and the melding of the financial hardship that's caused by those decisions, but also the relational harm as well. Okay, so just to wrap up really quickly, I think as we kind of look to and attend to like different futures, we need to be sure that when we look at kind of agendas for policy change, we focus on the relational as well as the financial, and also recognise our interconnectedness. But we also need to look at the processes of policy making as well as the policies themselves. And here there's a real role to look at whose voices are included, but also excluded in policy making processes. And there's a very strong argument to try and do things in more co-produced ways. And I also think, and this is like important, that we can try and work for kind of incremental and perhaps what might seem like small reforms, as well as looking at the longer term systemic change required. And to give an example of that universal credit journal, just creating some kind of reciprocal rights that kind of claimants themselves have, as well as their responsibilities, could help shift the relationship and help potentially improve outcomes. And then I just kind of conclude that to say that often, like working and doing this kind of research, it can feel like quite a difficult and hopeless context. But I think there's a continued place for hope, especially in the kind of work of parents whom I work with, who are involved in sharing their experiences and pushing for change. So that's it. So I'll stop sharing and hand back to Paul, who's going to share.
Well, thank you so much to Rob, to Nick, and to Ruth. Those were fantastic presentations and really complemented each other very well. And I think possibly as a result of that, we've got a huge number of really good and interesting questions. Let me start with, I think, a question I think we ask ourselves a lot. Someone's asked, tax credits were introduced by Gordon Brown as a humane response to poverty. Was this misguided in that it placed the onus on government rather than employers to pay decent wages? Rob, that's something that you, I know, and colleagues have been thinking about quite a lot. Do you want to start with a response to that? And then I'll see whether Nick and Ruth have any views as well.
Very big question. And you can ask a similar question in relation to housing benefits as well, whether that, essentially whether that just allows the other side of the market in that case, which is landlords, to charge higher rents in a similar way as how in-work transfers like tax credits might end up falling on employers and allowing them to pay lower wages. Very important question. We discussed that quite a lot in the chapter. There isn't a lot of evidence on it empirically. What evidence there is tends to come from the US in particular, and certainly not from the UK. What evidence we do have indicates that this may well be a significant issue, that a significant fraction of the money we spend on tax credits may end up essentially effectively going to the employer side by allowing them to hold down wages lower than they otherwise would have done, rather than just being a pure transfer to low earning households, which is the intention. So yeah, that's how I would phrase it. The evidence we have suggests that's probably a significant issue, or it could well be a significant issue, although certainly that, it's not, the evidence doesn't suggest that it all goes to employers. It does boost incomes overall for low earning households, but quite possibly not by as much as we might think, given how much money is going out of the government's door. Some of that probably is ending up on the employer side. One particular thing that I think it would be good to know more about, and it's a good example of where there really is benefit of joining up policy, is how does the answer to this very good question depend on other things about the environment that we might be able to affect? So, for example, one obvious answer to trying to ensure that firms don't respond to these income top-ups by holding down wages is to have a minimum wage. And obviously that's by no means a complete answer, that not everyone's on the minimum wage, but it's one example of how having another policy working alongside tax credits might help you to get more of what you want, in this case to stop wages being held down in response. So I think that is a good example of where we need more evidence, both on the basic question and also how the answer to the question might depend on other factors, some of which we can probably do things to affect. But it's one of the important unknowns that we discuss in the chapter, actually.
Ruth or Nick, would you like to respond to that, or should we move on to another issue?
No, I mean, it's a question about my pay grade, really, for better economists. but I mean, of course, the minimum wage is there to try and stop employers pushing wages down too low, and the big question is how far can you push a minimum wage up before you start affecting employment? And as I understand the evidence in this country and in the States, actually, you can go quite a long way before that starts to happen. And if your answer is to make, as you would in an ideal world, like to see that employers do pay more, you then face the question of what sectors are they in where you might end up just exporting jobs elsewhere to lower paying economies. So it's pretty complicated. But a minimum wage is clearly an important underpinning for a form of tax credit.
Yeah, it's clearly important to understand the complementary roles that benefits and minimum wages play. One would be forgiven for listening to some of the rhetoric from ministers for thinking that minimum wages could almost replace benefits. And indeed, that was part of the reason given for cuts to benefits through the 2010s. But of course, they play quite different roles and actually very often are received by quite different people. Ruth, there's a question here which you may have some insight into. It's a question about conditionality and sanctions. Do we know what's happened to the use of sanctions over time? Because I mean, my recollection is that they were used, they peaked during the 2010s and then came down, but have they gone back up again? What impact are they having at the moment?
So it's a very good question, and actually we clash right now with a webinar that's going on with David Webster, who is the guru of sanctions, and who does the kind of analysis of figures of sanctions. So if we kind of jumped across to him and asked him, but we can't do that. I think that they did decline, and obviously, like during the pandemic, there wasn't much sanctioning or any sanctioning. There was a brief, and I think what was really interesting, just to say on to the conditionality and sanctions, is that when in the pandemic, when kind of conditionality and sanctions were completely paused, the work of colleagues through the Welfare and Social Distance Project found that people were still trying to find work, right? So there was, in terms of those evidence bases, we saw kind of conditionality not an operation, but kind of very high levels of kind of job search activity. But I think there is concern more recently about sanctions continuing to rise. And I think it's really worth saying that even when sanctions aren't being kind of implemented, so when somebody isn't being sanctioned, people live with the fear of a sanction. And I think that's really when I look at kind of my research over time, and there wasn't time to include it in the presentation, but people talking about just that fear that they enter the job centre or they enter those encounters fearful of getting a sanction, and that's kind of a constant backdrop to their everyday life. So I think that's important to recognise.
Great, thank you. There's a question here which I think probably, Nick, is most aimed at you, but Rob, you may have a response. It's essentially asking, is there any point in having a combination of means tested and contributory benefits, or wouldn't we be better off essentially having a single system?
Shall I go first? Well, you'll never end up with a completely single system, because there'll always be people who will have not been in a position to pay contributions. So at some level, you're going to have a combination of the two. You can see, you can see people with tiny minds, particularly people working out the admin and the DWP, saying it'd be great to get rid of the contributory JSA and ESA, because it would just roll it all in, make it all means tested, much simpler to operate, cheaper, efficient. But as I pointed out, there are real advantages to people who do qualify for the current contributory-based ones. So I would be in favour of keeping them and indeed strengthening them a bit. I mean, I don't think there's any possibility that we will ever, switch to a big earnings-related system. It's just plate against history, and it would be immensely expensive. And if you look at the the reason that European welfare states are bigger and more expensive, cost more than ours, there's the two key factors are that they have earnings related benefit systems and they spend more on health. This is pre-pandemic numbers because the pandemic's bugging everything up, but broadly that's why they spend a lot more. I just don't think we would introduce a large earnings related system, but I still think it's worth preserving what we have got for working age people in the current contributory system.
Rob or Ruth, do you want to add anything to that?
Great answer. So not a lot really. I mean, echoing what Nick said at the start of his answer, I would point out that even countries that have a lot more contributory benefits than us, I'm not aware of anyone that doesn't also have a mean tested element, just for that very simple reason that you can prioritize the advantages of a contributory system as much as you want, but at the end of the day there will be people who don't have a record of contributions who are in obvious need. So I don't think you can go completely that way. But there is a case, there are advantages of contributory elements and therefore a case for having a little more of them. I suppose one thing I would say is there are things we've done within our means tested bit of our safety net which have sort of exacerbated some of the limitations of not having more contributory benefits. So for example, one of the limitations of not having a contributory much of a contributory system is that you have a group of people who have very low rates of insurance if they lose their job, because the sort of minimalist safety net is not adjusted for the fact that they used to have much higher earnings and perhaps have got used to having costs and expenses commensurate with that, and then suddenly they've got to pare back probably to an unrealistic degree very quickly once they lose their job. Now, some things that we've done even to the means tested safety net that we do have make that problem a bit worse. So for example, we've de-linked support for housing costs to what your actual cost of housing is. We have de-linked support for children to how many children you actually have. These are all things that just in terms of insurance, these mean that if you suffer a shock to your income and you've got expenses and costs that were commensurate with your previous level of resources, the system is doing very, very little indeed to help you smooth that situation over, and it would have used to do a little bit more. So if we're really worried about that sort of issue, there are things you can do within the means tested system that we have as well. We don't have to go all the way over to a very different sort of system.
Yeah, and can I just add to that? In the savings rules, for example, have not been indexed for donkey's years. So people, I think it's currently something like 16,000 for UC, and if it had been indexed since the mid 2000s, it would be more like 25,000. So people find themselves forced to spend down their savings very quickly to qualify for UC. So again, that's a delimitation to the sort of insurance principle of go back to Beveridge, saving for a rainy day. You save for a rainy day, you get penalised for it.
Yeah, it's one of the many consequences of holding things fixed in nominal terms for long periods of time. You change the shape of the system, and universal credit is, I think I'm right in saying, particularly ungenerous to people with even relatively small amounts of savings. There's a question here about the benefit system being unsuitable, forcing people to do unsuitable work, which in a sense is what you've been saying. I mean, Rob, I don't think you're saying unsuitable work, but certainly without much in the way of prospects. There've been cuts to adult education. The questioner says, is the answer some form of basic income? This is a question that arises very often when we're having big discussions on welfare. Ruth, have you got a view on basic income?
Yeah, but not we can't, I don't want to take up the next 7 minutes of the no. So I mean, I think I would say that for me on that, the priority is to rethink the role of conditionality here. So I would kind of challenge and question the government's kind of continued, and it looks like potentially growing reliance on conditionality, because I just don't think there's a strong enough argument for it. And I think it damages those interactions between Job Centre Plus advisors and claimants. So that would be my kind of plea. And I also think giving people opportunity to, undertake volunteering and training within that kind of benefit system, so that people can do the things that they want, they can go on to progress. That would be my priority. I think, there's things to, commend ideas about basic income, but it feels so far from where we are currently, and I'd worry about what level it would be set at. It goes back to Beveridge and the Beveridge principles. If we can make it affordable, what level would it have to be set at? And then there's a very real risk that actually we still need means testing, which remains stigmatized, remains problematic. So I'd like to see improvements to the way means testing is working now.
Rob, Nick, anything to add to that?
Well, I'm quite sceptical about universal basic income, because I think if you're going to have one, it would need to be set at a level that you could live on it, minimal level of income. So kind of sort of the level of basic state pension. And if you did that, it would be enormously expensive. So you have to have very high tax rates. And I don't see massive public willingness to vote for very, very high tax rates. And what would you do about all the current disability benefits and all? Would you stop paying those? Well, of course you wouldn't stop paying those. You still have to pay those on top. So I'm quite a skeptic about UBI.
Okay, well, I think that skepticism would be echoed here. It's extraordinarily expensive to do it at a level people can live on, and then in addition, you need things like housing benefit and disability benefits on top, probably something separate for children, and you end up, and in order to make it affordable, you end up reinventing something which looks like a bit like what we have. It is worth saying that no country anywhere in the world has ever had a basic income, and that there is a reason for that. We are 4 minutes from the end, and I'm going to ask the question here, which you're probably all three of you desperate for me not to ask, and that is a question from someone asking, if there was one thing you could change about the welfare system, what would it be? Let's go in reverse order. Ruth, then Nick, and then last word for Rob.
That's not fair. So I get I go last, so I get squeezed, or I feel squeezed, and then I have to get to so this, choosing one thing's really hard, but I guess I'd like to see us kind of involve people with direct experience of the benefit system much more in kind of policy making decisions, discussions, and processes. And I do think that when we do that, we learn a great deal, and it's really remarkable. It always makes me kind of think, because universal credit, when they rolled out universal credit, the government spoke about a test and learn approach. So they literally said, we're going to test this new benefit, and then we'll learn. And imagine if it had been a listen and learn approach, to actually sit down, have a conversation with universal credit, or wouldn't it be universal credit, social security claimants, find out what's needed. And I think you would have avoided some of those really embedded design problems that we see in the system today. That would be mine.
Great, thank you. That's a really interesting and radical reform, actually. Nick.
Right. Well, with so little time to think, I've proposed something very modest, but actually, all these sort of savings and other forms of thresholds we have that are not indexed, we should index them. Because all not doing that does is just squeeze the system time and time again. So it's a very modest proposal for a change.
One day I was
Rob.
That's very funny, because that was my one.
You have to think of another one, quick.
Yeah, well, but perhaps I'll flesh out that one though, because I was going to say, I mean, this is to pick something that's really very topical. Obviously, there are vaguer, bigger picture questions about how benefits might look, which we're going to have to deliberate on in the next phase of the Deaton review. But to step to something that's very specific and topical, recently, I think the most kind of just obviously absurd thing about benefits policy in the last kind of year or so has been the fact that basic rates of benefits have done so woefully badly at keeping pace with inflation, for reasons that really would be quite straightforward to fix. This is literally a case of even benefits that are in principle uprated, unlike the ones Nick's talking about, which aren't in principle uprated. They're not uprated in a timely way, and that's the kind of thing that sort of sounds techie and administrative and narrow in some sense. But for people on benefits, that means they spent a year with something like a 10% real cut in their income before benefits catch up again. In fact, at the moment, it's probably going to be until at least next April, because of the way all this works, when benefits catch up with the level they were at in real terms before the spike in inflation. And if you're on a low income trying to manage that situation, that is obviously a really big issue for you in your life. So it seems to me as an immediate tangible thing, I would point to that.
Well, brilliant. Three great answers. Thank you so much. We are pretty much at the end of our time. I hope you agree that that's been, I mean, for me, one of the best events on welfare I've been to for a very long time. A great overview from Rob and raising these issues, particularly about the way that the benefit system has been designed to get people into work, but not into work which involves progression or significant levels of pay. Wonderful overview of the history from Nick and how we got to where we are. And just such a valuable look at the experience of people on benefits from Ruth. And I think that really important message from her that to government, which is that when you're designing these stuff, please involve the people who it actually affects. And you might actually have both a more humane system and one that begins to have some of the effects that you want it to have. That's the end from us. Just a quick advert. I think that we have a short thing coming out tomorrow, specifically on local housing allowance and how that's not been, again, to reflect on what Nick and Rob have just been saying, not being uprated over time and the consequences of that. As I said, this is the last of our publications on the Deaton review following these specific topics, but there are now 19 big studies on our website. Please go and look at those. We will, though, be holding more events over the coming year. All of that enormous amount of insight to come up with hopefully a useful narrative and set of ideas about what to do next. So thank you all for listening, and thank you particularly to Ruth, to Nick, and to Rob, and also, of course, Rob's co-authors, Tom Waters and Hilary Hoynes. Thank you. And Hilary Hoynes. Thank you.